Good afternoon. Welcome to the Thursday, June 20th, public meeting of the Kingston City Land Bank's Audit and Finance Committee. My name is Mike. I serve as the moderator for this call. We ask that members of the public limit their comments to no more than 2 minutes per speaker. And with that, I turn the meeting over to the interim chair, Barbara Ioannidis.
Okay, great. Good afternoon, everyone. And I know we have a lot to get through today. So maybe Stacy, we could start with you and we can review the financials for May.
Sure. Good afternoon. We're going to start with the Kingston City Land Bank balance sheet. I'm going to share my screen. Okay, here comes Rebecca. And I'm going to share my screen. Having mouse difficulties, but here we go. Can you see the screen?
Yes.
The Kingston City Land Bank balance sheet. Okay. So this here's the balance sheet. Something that's of significance, which I did write in our email, was we have a pledge receivable for $500,000. That's for our 6-home rehab program. So we haven't received it yet, so it's not in our cash balance, but we should be expecting it in August. That's a significant part of the balance sheet. We can see that there have been some increases in fixed assets. We're doing some pre-development, so it'll increase some of the 6 homes. Just small increments right now until we get started with the construction. And then we have small accounts payable this month. So we didn't have any construction going on. And that's really the only thing for the balance sheet. Does anybody have any questions?
No, pretty straightforward.
No, yeah.
Okay, so now we're going to go to the profit and loss statement. And again, I show it the 5 months. That's what was requested, so you can see what's happening. You can see the interest income here. Again, this big one was when the CD came due. We still have another CD, and that will come due, I believe, September. So here's the grant income that I talked about. We have to record it. That's the generally accepted accounting principles. Even though we haven't received it yet, we're recording it in the month of May. Here is our reimbursed grant income. Again, we are expecting the reimbursement. So we submitted that one. And we are expecting it, and I think Mike said that, I'm sorry, I'm a little confused. Give me 1 second. We have received it already. We received the 122,000, excuse me. We have submitted, so we're on a little bit of a different time frame. So we submitted the next rec for 219,000, which Mike just recently told me that we should be getting this week. So that's why I'm a little bit confused. So in June, you'll see that. And this grant money is being used for some admin and for the pre-development part so far in the 6-home rehab. The next part here is that we had $35 in donations. Then the next part is all the operating expenses, which are right in line with the budget. Anybody have any questions on any of this?
No. Pretty straightforward.
All right, and then next is really easy because the entity isn't doing any business anymore. This is the Kingston City Land Bank, KCLB Maida Legacy Cities. You can see the difference is in the cash. We have paid out our accounts payable. So that's all clean. See, it's here 0. So we have this much left in the bank right now. Everything else is 0. We've sold the houses, paid back the loans, and we're waiting to close that entity. We need to speak with legal on the timing of it, accountants, see what about the tax return, and then we're leaving the bank account open because we're expecting some insurance refunds. So in the next few months, we'll have more answers about wrapping this entity up. And that's that. And then on the profit and loss side, the only expense was this is the operating expense, which is bank fees. And we had the bank fees because we had bank fees come with the transfers of the wire. So in June, we didn't have any transfers of wire, so we won't have any bank fees. And that's that. Anybody have questions on that?
No,
Okay. So I'm going to stop sharing my screen. And what was the next order of business that we were going to do?
I was thinking the audit review or the audit process. Just touch base.
Okay. Okay, so yeah, we've been working with the auditors, Mike and I, back and forth and reminding them to get back to us. We are in the final stages. I spoke to the auditor yesterday and he was going to submit some changes that he and I went over yesterday and hopefully have a draft by the end of the day today for me. He has to go back to his review partner. The changes, that should be pretty easy. And then he's going to have a management letter for us to sign. So that's what's open on that. And then would you remind me, Mike, of the process, please, for the audit? We need to just present it to this committee, correct?
That's what we've done in the past. And then
Okay.
the management letter is signed by the board chair, is my recollection of what
Yes.
we've done in the past.
Yes.
And then it's included in the board package once it's fine.
Okay. So do we need to have a separate meeting for the audit?
Outside of the regular finance meeting next month?
Yes, because I would like that, I would like the management letter to be signed and by Monday. I was hoping to have it ready,
What's the
everything
time?
close up.
Oh, so you want this all tied up by Monday?
Yes,
So we would have to get the documents and review them and have a meeting before Monday?
I don't know what the process is, Mike, do you remember?
I don't. I think I remember some hurried signing by board chairs past at the board meeting various years. And so, I mean, this is technically the finance and audit committee. And so there could be some email review of the document when it comes out in advance of the board meeting on Monday, if that sounds good to you, Rebecca, and then bringing it to the board chair to sign. The board chair is signing the management letter. The audit, in my mind, kind of is what it is.
Can you define the management letter? Could you define the management letter, please? It
Pick up
says
Stacy is the expert.
we hold these things to be self-evident and true. Is that mostly what it says?
Well, we have to attest to certain things. I can send you a last year's. That would probably be a good idea. So we'll send you last year's copy so you could see. It's they're they have made one comment about their audit, and that will also be something that they're telling us this, and you have to sign to say we understand that that's what you're informing of us. Any kind of deficiencies or problems with the audit come in that letter. So they're gonna
Maybe send that to the whole committee, Stacy.
sure, yeah.
And send it around. If that makes sense to you, Rebecca.
Yeah, I'm just trying to understand what the purpose of this audit is. Not the purpose of an audit in general, but like the process of creating this audit. Like we have this, we've hired people to do this audit. Their job is to review our books and to comment as an objective observer. Let me know when I'm doing something wrong, right? To comment as professional and objective observers about our use of funds, our reporting, our all of that jazz, our payment of taxes and anything fiscal, right? And then they say, in the pursuit of this or during this audit, everything looked great except for A, or during this audit, we think you guys are crooks. Or B, everything was perfect, or, like whatever it is that they want to say, right? And then here's the part that I don't understand, if that is true so far, is now we have this audit and we have this letter that's signed by the board. What happens to it then? It just sits somewhere until someone asks for it. We send it to the IRS, we send it to the state.
Let me just step back for a second. Like, they
Okay.
will not issue an opinion if we're crooks. That's first off. So again, they have their standards that they go through. There's a checklist of how generally accepted accounting principles are. They go through it. They ask us for documentation to verify that our books are fairly stated. That's the words that they use. And then in the manage, so the opinion is like that they believe that our financials are presented fairly. Then the management letter says, these are the things that we found. They are not going to change our opinion, but these are things that we found that we'd like to just let you know about. So this one, the only thing that they're going to note is that they think that we need to have a better IT policy. So, and it's very small to have an IT policy with such a small staff, but we could talk, that's something we could talk about. And again, it's a recommendation more than anything else. And you could say, okay, thank you, you told us. We understand. And then furthermore, with the audit, we need to give the audit to in our ABO reporting. It's very important for that. And it's very important for the city controller, correct, Mike? Is that who also
In years past, that's a great question. In years past,
Yeah.
it has been requested by the comptroller, so we will see if that.
control? Yes, all right. So
So,
those, and it's actually, nonprofits have to that we fit into this category where we have to have an audit. It's not like because we think we want one. It's a requirement.
I mean, I figured, I'm just trying to understand what would be the purpose of us reviewing the audit? Because it's not a lot of time for all of us on this committee to review the audit. If we review the management letter and then could look to the audit if we have questions, I just want to know how much due diligence do we feel is required before we can mandate the board chair to sign the letter? Any, some, a lot, what?
I'm maybe speaking out of line, but I'm going to say that I think that you hiring me in this role, in my expertise, I've been working really closely with the auditors, and we've gone back and forth about things that I don't agree about with them, and they know that I'm competent enough to talk the language of it. So I think that the board knows this from the past, and they might have just feel like, okay, we've given this task to Stacy, and this takes it off of us, because most people of boards, I don't think would be able to read a financial statement and to know if it's properly stated. But
Right, that's why I'm asking. So I think, in terms of getting the thing signed, the letter signed by Monday, it would seem like it would worthwhile to me, Mike, and you guys, if you sent us the letter and you sent us any comments about the process that you would like us to know, so that moving forward, with you, but also with this audit company, we would have that information, not just their comments, but also your comment in terms of, whatever might be useful for us to know, maybe, and then we can review that and sign it at the board meeting. Since we do look at all the financial information rigorously every month, it's not like anything is new or we're not participant in that conversation already, right? So it seems to me that I just don't want, Barbara and everybody have to go home and try to read the audit, right? So, if that's not what's required, if that's what required, I want us to do it, So does it make sense to take it that way?
I think so, Rebecca. I think that makes perfect sense to just have everyone's attention focus on the management letter if they're so inclined to read it. The management letter is really to the board letter from the auditor.
Mhm.
And the audit itself is the audit that's been completed, as Stacy mentioned, in accordance with good standards. The management letter comment about IT might be something to focus on. I guess we could talk about that. I'd like to see the final wording on it. My recollection was that it felt like they were looking at a company to have a server and a server room and those type of things that we don't have. And I don't know how many companies have that in 2024, but maybe it's worth revisiting. Maybe there's something on. But I think that's a great idea, Rebecca, just to review the management letter. Nobody has to spend the weekend at the audit.
So because the management letter will contain any comments
Yes.
regardless. So maybe, review the management letter, and then would you still circulate the audit once you have it so that we can look at it, but for Monday, then, okay.
Yes.
Great.
Yeah. So does that mean that this committee has to give permission to sign the management letter? Is that what I'm hearing?
We haven't done that in the past.
Okay.
That's really good. It's the board chair.
I mean, we could do all that at once if it needs to be signed in person, right? But if you need it done before Monday, we could. I don't feel that we need to sign off on it necessarily. I do think we should read it, and whether or not you want to write anything down, Stacy, is up to you. But I do think that the auditors are employees of ours that we pay, right? Right? We hire them. Don't we hire the auditors?
Yeah, but they're not employees. I just wanted it there.
I just meant we give them money, right? Right?
Correct.
That they're an expenditure of ours, right? So of the companies. So if you have feedback that would either make that, going forward, if you have feedback that would make that relationship more streamlined, or if there's anything, I got the feeling that last year there was a learning curve that occurred and things were changed. And, so it's an ongoing dialogue between an entity and us and you. And, if you have anything to share about that process, I would empower you to share that to this committee. That's what I'm trying to say. Since we don't work with them directly, we don't know if it was, a huge nuisance or you love them or, whatever other pertinent questions, right?
Right.
Yeah.
Right. I think the difficulty for this or any is this LLC that we had just made it completely different than anybody has seen before. That was the part that makes this a little bit trickier than a straight audit, but I can write that. Absolutely.
I'm happy to work with you on that too, Stacey.
Sure.
I have some bullet points. I think Rebecca would be what you're looking for to summarize our experience.
And so we have that in our mind going forward. If we create another LLC and we need to make sure that certain things are taken care of in advance, or we need to express the language of the LLC in a particular way to streamline the audit process or whatever other kind of, I dotting that might make those relationships more streamlined, because I would suspect that there would be other LLCs coming forward or other creative partnerships, things like that. That's all. Yeah.
Will do. I'll as soon as I get it, I will forward it to everybody.
It's like, making bread, some days it works and some days, oh, we should have done that, just, whatever it is that we didn't do, so we know. And institutional memory is, I think, given that academic institutions frequently have none, institutional memory can be helpful, That's my opinion. And as always, Stacy, you do an excellent job explaining a complicated thing. I'm pretty sure you do it while running or, or something else is going on somewhere else. So I appreciate your focus and your time. Thank you.
You're welcome.
I'm sorry, I was at the zoning meeting, just lest you think I have. a life or anything, so.
We thought you may have gone on vacation a little early. Rebecca, so we
They're
weren't
fighting
sure.
for this form-based zoning.
Cool.
Do we
The
have-
next item that we had on our list came from a discussion at last month's finance meeting to better understand the process that we use both for budgeting and for requisitions. I think, Rebecca, that was something that you want to see more of. And so that is why Kyle is here, because he's put together an amazing presentation. I think very informative. And with that, I will mute myself and Kyle, please take it away.
Thanks, Mike.
Yay, PowerPoint. I love-
Cool. Very exciting PowerPoint.
Okay.
So I'm gonna try and 1 second actually. Sharing stuff. Okay. So I'm gonna run through some of our project management budgeting considerations. I'm gonna try and keep it short. So you can get to the budget review, but feel free to jump in with any questions you have, and I can pull up any backup documents or go into more detail on anything if necessary. Cool. So last month, as Mike mentioned, the committee requested that we give some insight on how we approach budgeting and funding and expense tracking on new projects. We thought it might make sense to show how we approach this using the KCLB Affordable Homeownership Rehab Program as an example. So just as a reminder, the KCLB Affordable Homeownership Rehab Program, it consists of a rehabilitation of these 6 homes. We have Maida serving as general contractor on 4 homes, Dynamism on 2. We budgeted a total of 4.5 million spread across these 4 funding sources, and we think this is going to take between 12 and 18 months. So the first step in this process was to come up with a total project budget, which you see up top here. We used a combination of previous project costs, quotes we received for work, figures from the general contractor RFP, and the actual executed numbers to come up with these project costs and spread them across these line items. And from there, we had to look at the funding sources we have available and how to best allocate the fund across this work, but not only at the project level, but across the 6 homes. So for example, you'll see here the Land Bank Initiative funds. They have a deadline of year-end 2024 and can only be used on pre-development rehab costs, hard costs, and operating costs. So we applied those funds to those categories, and our goal is to draw down on those funds as rapidly as possible before pulling from any other sources. And the table below goes into some of these funding limitations and covers the requisition details as well. For example, LBI recs, they can be made as needed, and they can either directly pay outstanding invoices, or they can be used to reimburse the KCLB for our costs. Also, like worth noting, ARPA funds, they can only reimburse, they can't be used for direct payments. And we can only apply 198,000 of ARPA funds per house. So we needed to split those funds across houses in order to maximize the spending. Ideally, we would have just back-ended 975,000 onto the last 2 or 3 homes, but we have to split those out across 5 homes actually in order to maximize those funds being used on the project. And then it's also worth noting that these funding sources, they're within a larger ecosystem of projects. So the LBI and ARPA funds, they're not only being used for these 6 homes, but ARPA is being used for 3rd Avenue costs and the demolition at 177 Murray. LBI is also going towards 3rd Ave acquisition and pre-development costs. So just on the detail of how a specific requisition might work, all project invoices for a month are stored in a project specific folder. Then I'll assign these to specific funding folders based on those allocations I showed before. So anything that needs to be reimbursed or paid by LBI will go into an LBI folder. And yeah, so we'll review these project level expenses of the team. The Novo and developer equity payments, those will be made as is, as necessary. And we'll submit LBI and ARPA requisitions monthly. These requisition processes, they require a lot of detail. We need to send over invoices, proof of payment, lien releases. And again, it's not just for the affordable home rehab program here, but also for Murray and Third Avenue. And then we need to track the overall balances, not just, for this project, but for all of our projects. And then the requisitions are going to be summarized monthly on a project level. So on the right here, you see the May requisition summary across all of our projects. We just have this $220,000 in LBI funds. As I mentioned earlier, we're trying to draw down LBI funds as soon as possible on this project, and it went to those 4 kind of line item summaries there: hard costs and pre-development program delivery. And then next. So that was a project level requisition summary. And then here's a grant level requisition summary. This is using the HCR's LBI form, but basically I took the individual expenses from Third Avenue, from the Affordable Home Ownership Rehab Program, and we put them together in this one document that shows all our expenses to date, the total funds committed to the project, and our balances. So that's kind of big picture it. I can walk through the actual tracking and requisition documents here. Like, for example, this is what we're using to track all of the Affordable Home Ownership Rehab Program. These were all the invoices for our 4th requisition stored here. And then from here, these invoices that are tracked are put into another tracking document. This is our LBI tracking document, which flows into the same thing here, showing our balances and how much we're requesting and how much we've received to date. So just kind of example of how we're approach budgeting and tracking this stuff. It's a collaborative process, and lots of moving folders around and checking in on expenses and collaborating on that stuff. But that's kind of a high level overview. Happy to answer any questions people might have about any of that.
That's great. Thank you.
Thank you. That's very
Relaxing it.
helpful.
Yeah.
Wonderful, yeah.
It's a really stupid question about the use of the word payment versus requisition. So can you go back to your slide? It's like slide 3 or something like that. It's not a chart. It's I'm confused.
Yeah.
You don't have to do that. I mean, what my confusion is that, like, it says like Novo, like equity payments, but those are actually requisitions. Requisitions from Novo, or not payments back to Novo, right? Like, I don't understand the word. So go forward one more slide. Go this, So it says, Novo and developer equity payments made as necessary.
Mhm.
I just don't understand that piece of language.
That was
So-
just meant to show that so the Novo and developer equity, those are funds that we have already. And LBI and those ARPA requisitions, we can only do those monthly. So we summarize a bundle of our expenses into
So
our
those are,
requisitions with them as necessary, but
so those are payments from that fund, right? Payments from that fund to,
yes.
like,
Payments from our money to whatever expenses we have.
yeah, it's a
Yeah,
payment. It's like, we're gonna pay bills that are appropriate from Novo to whatever this other vendor or whatever other cost, right?
Yes.
That's what you mean by equity payments, not payments back to them, right? I just don't. Sometimes,
Yes, to the vendor. Yeah.
okay, great, thanks. Sometimes it's just a abbreviation that works in your head, doesn't work in my head, so That's all. Thanks. Thanks. Everything else is great. It's really helpful.
That's very helpful.
And then you could stop sharing. It's hard to talk, really. It's hard for me to say. Thank you so much. This is really a question from Mike. So you guys, in your annual budgeting process, have, a meeting of the minds about what you're doing and how much things are going to cost, how much things cost before, how do you think, what's the price of lumber this year? Whatever other kinds of costs and stuff that you think are coming forward, right? That's how you do it?
Yep. Yes, particularly on the project level. We have to get as granular as possible. It's not so much the individual cost that we're estimating, it's the percentage complete of the projects that we know the budget for. So if we have $100, build 6 houses for $100 in some alternate universe, and we think we'll be 75% through in the calendar year 2025, the budget is $75. That's how we land at those aggregate numbers. On the specifics for the operating, Stacy and I go through actuals. Not to jump into the budget yet, but just to maybe to stick to the project level. Rebecca, that's how we do it on the project level. It's percentage completion of various initiatives.
Okay. Just
Yeah.
curious. And this is mostly a doing business question that comes from a lot of crooked relatives of mine. I kept getting, I have a lot of crooked Tennessee relatives. Not that you would know any of those, Kyle, crooked people from Tennessee, but they would always get they get in trouble for embezzling the floor planning money. I don't know if anyone knows anything about floor planning money in car dealerships, right? But you can only use the floor planning money to buy cars. That's all you can, you can't use it to pay your employees, right? And if you use it to pay your employees because you didn't sell enough cars, then you get to go in front of the court, right? So my question here is, that's where my limited experience is. Then when you have these designated funds, you can't rob Peter to pay Paul, right? It's
Correct.
really, yeah.
Correct.
So part of your budgeting magic is being able to designate the right amount of money at the right time, right?
Correct.
But that's not too many rights in a sentence, yeah.
Right.
Right.
That was the
okay.
exercise that we undertook over the past few months to figure out how much LBI funding we wanted to ask for to finish the 6 rehabs and allocate the proper amount of ARPA funding to be able to do Murray Street, because they were all restricted uses. So that was the vision quest that we went on. So there's no cross-contamination of funds.
And then that's part of what's reflected in Kyle's excellent PowerPoint in terms of having to spend out the money with a hard deadline faster than money that doesn't have that deadline, right?
Exactly.
But you can't spend it for anything that it isn't designated for. So, so it's a little bit of, it's a lot
Puzzle.
of dimensional chess.
It's a puzzle. Yeah, it's a
Yeah.
puzzle.
It's a puzzle. Yes.
Like Vulcan chess, right? From Star Trek.
3D chess, is it the 3D one?
That's why you need 12 by, you need enormous spreadsheets and multiples to track it all.
Totally.
It is amazing that this, oh, sorry, go ahead.
No, I was just going to say that to me, from a process point of view, that's why the question, are we on budget this month for this committee, is a good one, right? Because the relationship between the budget and the source of funds and that process over time is really where it seems to me, Mike, that a bad planner could really screw up. Do you know what I mean? You could end up without the money to finish the house, but the only money you have left, you have to pay to your staff, or whatever kinds of mucky, we didn't think of that problems, right? So.
Absolutely. It's a very conservative estimate of where we will be on our projects, where the funding will be available for operating and the projects. I've lived through what happens when you don't do that, and so thankfully we're not at any risk of doing that. It's very conservative.
Thank you. I don't know if you other guys enjoyed that, but I enjoyed that. That was very helpful to me.
Agreed. I thought that was great. It's nice. It's interesting. we hear about each category separately, but it's interesting to see it. It's nice to see it all because we don't see the construction budget stuff. It's nice to see it all together so we can kind of imagine how it's all going to get structured. It is kind of amazing. I was just going to say that it's kind of amazing that there's enough funding available right now. I feel like I keep coming back to this, that we're going to do this whole project and have no construction loan, no interest paid. It is purely equity from a few different sources. Yeah.
It's great. It's
very
great.
cool.
We are a trusted resource of the state of New York, as they said. So that's what comes with it. They trust us very consistently, doing exactly what we say we're going to do. So this is how. Right? It takes a lot of big spreadsheets and squinting over Zoom, in my experience, from my perspective. You need a bigger screen. Okay, Rebecca, if you're okay with it, the last item to talk through is the 2025 budget.
Right on time and right on topic.
Let's do it. Stacy, would you mind pulling it up, the PDF that I sent around? And as you're pulling that up, Rebecca, before you jumped on, we were speaking with Barbara about the process and sort of the timeline backing into what we hope is a successful award from the Nova Foundation. It happens every year, and that's why we start the process in May, and that's why it comes to the Finance Committee in June. I'm happy with the budget every year, but each time Stacy and I go through it, I get more and more sort of happy with being able to reliably forecast and looking at the actual expenses and seeing that we were right last year. And so we're pretty good at ballparking where certain things will be on the operating side. I did send around just what I think are the highlights from my perspective. So we are forecasting a 44% increase in development costs. These are projects that we plan to have under construction. That's over last year. Overall, we're forecasting a 35% increase in an operating budget. This is from $3 to $4 million, which is exciting to show, I think, responsibly that we're growing in the right direction. Stacy talked about this in the financials, but a new funding source this year is the interest income, which was a great innovation that Stacy brought up the moment I met her for coffee as to why maybe we should start doing this. And so now it's come to fruition. There's $25,000 that's anticipated to be recognized next calendar year from that source. I did want to highlight that we've expended no dollars for fundraising to date. And maybe that is something collectively we can just take into the next year and think about ways to use the money that we are allocating in the budget for that.
Yeah.
And then finally, there's a $15,000, it's a doubling of the expenses in the advertising and external communications this year. This is in the context of some discussions that have been taking place about how to do better with our social media and external communications and outreach. Stacy, would you mind zooming in just a little bit? Maybe it's me.
Sure. I just didn't know if like it was going to come off my screen. What do you think?
Oh, it might.
More? Is that okay?
That looks okay to me, if that's okay with
Okay.
everybody else.
So we were here at the
Yes.
15,000. Yep.
Yes. So overall, broad brush, forecasting a modest increase of 8% on the personnel services. Well, first of all, to back up, a 0% increase in office expenses. We feel relatively flat is working. We did want to highlight that the staff at the land bank would like to join and possibly participate in the New York State Affordable Housing Conference. There is one that's been well established for about 30 years, this group down in the city. And they have a relatively new upstate conference in Albany in September. I think it's a very professional group, and it's great to make connections for the work that we're doing. So that would be the reason for that increase, but overall it's flat on office expenses. Personnel, as I mentioned, a modest increase in part due to recognition and the board's consideration first, and recognition of a 401k program, which to us is greatly appreciated. That is the update on that piece of it. Slight reduction, I guess, in accounting is maybe worth mentioning, but nothing extravagant there. The property maintenance section, well, it's flat in the aggregate. This was based on conversations with Owen and Stacy about actuals and number of buildings that we believe will be responsible for. There might be a tweak to that at some part in the year because, as we've mentioned at ADC and at officers' calls, the city is considering an alternative code enforcement methodology to take title, acquire properties, and then they would offer them to us. This process is really in the early stages, so it feels to me like we won't be crossing that bridge or evaluating those opportunities until the middle of next year, at which point we would be mowing more lawns, for example, or doing something of a minimal nature on those properties. So that may change, but I think for right now, that's the best forecast that we have for the properties that we do own. Moving down to the development cost section, we are just doing more work. So that is great. That's where I think that that's where we think that we will end up at. And in the aggregate, that's a 35% increase year over year in terms of the overall budget, a 44% increase in the work that we're all here to do, which is the real estate development. I guess one
Awesome.
piece. Yeah, sorry, Rebecca. That was it.
No, I'm just being supportive, and I do have a question, but someone else had a question first. Aaron, did you have a question?
No, not
Okay.
immediately. Go ahead.
I just, it's mostly a question about security and where security might fall for the properties. Does it fall under property maintenance, or if we have some sort of issue where we feel we need to increase security or provide security?
We have a burning question that we ask every Monday to Owen about what's called the VPS system, the security system that we have on 2 of our buildings right now, Hasbrook and Grand. And that question is, when can we stop? Because it is a significant expense of approximately $700 per building per month. So we think that we will stop that definitely this calendar year when the contractor gets started. The contractor feels that they're ready to sign a contract for those 2 houses. Site security becomes their responsibility. So all that to say 0 will be for the 6 buildings that we have. All 6 buildings are under construction, and everything else we own is vacant land. So thankfully, I think that expense goes to 0 this year. It stays at 0 next year.
So when the contractor starts working on the building, they become responsible for security of the property?
Yes.
And that includes squatters, et cetera?
Yep. It's a relief that we don't have to worry about it, and they have to worry about it. But they're there every day too, most times, sometimes on the weekends. So there's a heavy presence on the sites that are under construction.
Yeah, I mean, it's a pretty granular question. I just think
Sure.
we have a lot of property working at the same time. And the more public we become, the more people will know where we are and what we're doing. Right. So.
Absolutely. The contractor has already asked also when we're taking off the VPS system, the security system at Hasbrook and Grand, I think because it precludes some preliminary construction investigation they would like to do. So, but thank you for that. That is a significant expense that's going away this year.
And hopefully we will not have to put VPS systems on again, and we'll not have another issue in the near future. But yeah, we'll see.
So I would highlight down in the revenue section, there is the request highlighted in orange to the Novo Foundation. And I guess for the purposes of this being a public meeting that will be put up on YouTube, I guess we can just say that's the request. So we haven't formally made it yet. We haven't been invited to make that formal request number. We won't hear back for quite some time, but that's the request.
So last year we requested 852, and we ultimately got, what was it, I'm forgetting the number right now.
350.
350. Okay. So 573. Okay. That's the right direction.
We hope so. We hope so.
Okay, thank you.
Welcome.
Do you need us to do anything official about this?
I think just as a matter of formality, you might consider discussion and a vote to move this to the board on Monday for a vote, just to take it out of committee, and then it would be in the board package tomorrow.
Okay. I will do that.
So I'll make a motion to consider that, to send this to the board for review and approval as our budget 2024 on Monday evening.
I second that motion. So all in favor? All opposed?
No, no.
Okay.
Stop sharing. We're good?
Yeah.
Done
All right.
early.
Oh, is that what we need to do?
Yes, I think that was the only agenda.
Brilliant. Brilliant. I asked Barbara to take the meeting in July. And we are not meeting in August. And if I decide to come home from Europe, I'll be back in September. Well, last time my kid kept saying, "You're not coming home." And I'm like, well, I don't know.
We'll miss you while you're gone, Rebecca. We'll be there in
Enjoy,
spirit.
have fun.
Can we turn the recording off?
Sure, we're
Okay.
ending the meeting.